Once the candle goes green, we're in a buy. Once it goes red, we're in a sell. It's that simple. Your mind will want to complicate it. Your mind will want to dig into it and understand why and how and etc. and try to put on indicators. And you're free to do that at any time. We teach you how to make strategies. If you watch my original videos, they're about an hour long, teaches you how to make systems. But literally, once this goes red, once this goes green, it's buy. Once it goes red, it's a sell on the first candle. So we'll wait for this to go red, and you'll see once it goes red, at that entry price is a sell. The buy was right here for this trade. In this case, if this price comes back down here, below the green entry, that's a buy right around here. And this is the stop loss, 10 points away. So this is the range, -10 plus 20. So you can see it went from 65 and it has to reach up to here, 85. And now you see it's reversing. There you go, it reversed to a sell. So this is a sell right here. But see, it already passed your entry price. So you don't enter yet. You let it go back. If it doesn't go back and you miss the trade, that's fine. But as you can see, the buy did not finish. So we're actually still in this buy. See right here, we're still in this buy, ignoring the sell. So now let's go take that trade. We're in this buy right here at 7170. And now we will wait for it. So because we entered at 7170 and we said our stop loss is 10 points away, what's 7170 minus 10? 7160. So I click modify, stop loss 7160.85, target 717. Oh, I typed that wrong. 7190.85. So you can see this is 10 points away. See, my entry price was wait, let me draw that for you. So my entry price right there, 7170. My stop loss is 10 points below, and my target is 20 points above. So you can see there's my entry, there's my stop losses right there, and my target. So here's my entry, here's my stop, and here's my target. So 20 points above, -10 below, and here's my entry. Same thing you can see on our chart. Here was our entry. See right here, right there. And now we're just waiting. As you can see, these candles only moved like, wait, let's see, like this had like 5-6 minute moves, but on our candles it was a very clean, simple trend, and it shows you everything that happened inside. So you can see it started here. Let me draw one more time. So you can see it started right here, shot up, just like how this started right here, shot up, and then it shot back down, shot back down, shot up a little bit, shot up a little bit, and now we're going back down, and now we're going back down. So again, I'm going to do it in yellow font, so that way you feel the yield sign or whatever. Here, so started right here, right there, right? Shot up, shot up, shot down, shot down. Did a bunch of this choppy stuff, did a bunch of this choppy stuff. This was 4 minutes, but this was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 points up, just like this was 12 points up from here. See, from 74 up to around 86, right? And then shot back down, and now it's back up kind of, and it's going to our stop loss now. So now once this goes to stop loss, it'll be a close. It'll be a losing trade. There to hit our stop, and that's it. So that was -$10. Now this trade still hasn't expired yet because it did not hit the true stop. We actually entered in late. Doesn't matter, but it happened. And now the next time a green candle forms, we'll be back on the buy again. But because it did not finish, as you can see, it did not finish, we're still in this trade. in reality, we're still in this trade. See, like this was the entry and now it's below. So you saved like 3 points. See, from here was your entry and now it's down here a little bit. So you saved a little bit, right? So now we would still be in this buy. We're still in this buy for 8 points. So see, our entry was 61. Let's just ignore the 63 because it's averaged out. Let's say we enter a 61. What's 61 minus 8? 53. So at 53, if it touches 53, we're gonna get out. Same way here, take a look at this. Here's our entry price. Let me draw this again. Here's our entry price. It's down here. This is stop loss. So approximately 8 points down. So this will be right around here. So once it goes right around here, we're out of that trade. So 53, once it touches 53. Or from 61, it'll go up to 81. So from your entry price, target is 20 points up or 30 if the market's really fast, just volume. And stop loss is always negative 10. Negative 10 on the trade. They're out, closed. You always exit losses. No matter what, don't feel like the market owes you anything. Get out of trades instantly. Now, speaking of, and there, look, it shot up now, obviously. And now the buy trade will come. So now again, this buy trade will form right around here. Once this candle closes, let this candle close. If it closes, and then it'll reverse to a buy, or it'll go back down to stop loss. The total risk we're doing per trade is 0.5%. That is how you develop an edge. Because the market is not going to give you profit if you're risking 10 to 20 or even 5% of your balance. If you think about it, 5% of your balance, you get 4 trades wrong, 20% gone for nothing. 0.5% is how you realistically churn small and extract small gains every day. Don't be that person that risks a lot of money with the hopes of making a lot of money. It won't happen.